So for those of you who are joining us, thank you again. We are so excited to be able to offer this information to you. Just to go over quickly some housekeeping items. So all participants are muted. Please use the Q&A module on the ribbon across the bottom of your screen to ask questions and not the chat. We want to make sure we get to every single question. So using the Q&A module helps us to ensure that we at least get to as many as we can. Questions will be answered at the end of this event. We will, like I said, set aside some time for that near the end. Video and slides of this webinar will be made available to all attendees. We will send a follow-up email with that information and any necessary links. Please feel free to use the chat box if you have, if you're not able to hear or see anything throughout the event, or if you have another issue. And with that, I will turn it over to David Griggs, our CEO and President. David.
Thank you, Margot, and thank you everybody for joining us again this morning. Much has happened since we started these webinar series not quite a year ago, more on the beginning end of the pandemic. Hopefully we're now nearing the end of the pandemic, but we still have a tremendous need in our community and tremendous need for assistance. And we have a new round of PPP funding. Again, can't stress to all of our listeners, watchers today, to get the professional assistance through your banks, through your law firms, through your accounting firms, so that a good application is submitted the first time, increasing your opportunity for assistance. So we're very excited today, again, to be partnered with the SBA. Today we'll have Catherine Marks, the District Director, helping us understand the new rules and regulations around the SBA. We have also a great partner of ours in Whittlesey with Drew Andrews and Brian Kerrigan, who will walk through some of the nitty things that you'll need to have available to you before you submit an application. All of that said, thank you for your trust in the Metro Hartford Alliance and bringing you this seminar, for the information that we're passing on to you, and for your investment in our organization and your commitment to the Hartford region. We know that we'll be able to get through this together, and we appreciate everything that you do and the people that you employ to make this region great. That said, I'll turn it over to Catherine and the SBA. Thank you.
Thank you, David, Margot, and thank you to Metro Alliance. It's a pleasure to be with you today. There's a lot of information to talk about for this federal stimulus package that was passed and signed into law on December 27th by President Trump. We are not going to get through all the nitty-gritty here today. What we would like to stress is that help is on the way, and here at the SBA, our mission is to help the small businesses first and foremost. So we'll be giving you a brief overview of some very complex programs, and we are here to help, and we are here to work with our resource partners as well. Next slide. So what we're here to talk about is the relaunch of the Paycheck Protection Program. There is a lot in the bill, again, that was passed, but we would like to highlight some of the information on the first draw and the second draw of the PPP program. Next slide. So the first is that it did open on Monday. It opened on Monday to some small CFIs, Certified Financial Institutions, and that is because the SBA has a real want to make sure that our access to capital for this round of the PPP is going into the communities of the underserved. So we did launch this PPP on Monday. There are 2 financial institutions in Connecticut that are currently accepting PPP loans. Shortly thereafter, the entire program will open. Again, it's distinguished between first draw and second draw. And the next slide will show you the contact information for the 2 financial institutions in Connecticut that are currently taking the first draw and the second draw. Thank you. That's great. So this is some of the important dates. We opened on Monday, and then we will open second draw on Wednesday, and shortly thereafter, the remaining institutions in Connecticut will be accepting PPP applications. It's exciting to tell you that for the first round of PPP, over 65,000 Connecticut businesses received PPP loans in the amount of $6.7 billion. So if there are any lenders on this phone call, congratulations to you. That was a Herculean effort that you went through last spring, and it certainly did help our Connecticut businesses. Next slide. These are the 2 Connecticut businesses that are currently taking PPP loans. Next slide. So again, I continue to talk about first draw and second draw. What does that mean? 1, that means that if you did not receive a PPP loan the first time, you now have the opportunity to go and receive a PPP loan. PPP is Paycheck Protection Program. I don't want to give you a mountain of acronyms. What you must understand, and I'm sure the accountants on this call will go into it in very much more detail, because I am not an accountant and I do not play one on TV, is that the Paycheck Protection Program is indeed a payroll program. So that means that 60% or more of your loan amount must be used on payroll related expenses for you to get the loan forgiven. So these are PPP loans where we would hope that you would get forgiven at the end of the period. We did expand, what's really important, we did expand the eligibility of expenses. And if you went for the PPP loan, you can also request an increase to your PPP amount. Next slide. So who can apply for the PPP loans? Again, business entities as before, business partnerships, corporations, and LLCs. And we've also included the eligibility. So this now includes 501c6 entities, which mainly are Chamber of Commerce. We also increased housing cooperatives and some eligible news organizations. There, again, this is very high level information that I'm showing on the slides. All detailed information is on sba.gov, and the information that I'm showing you today is as of January 10th. Next slide. So let's talk about forgiveness. What does forgiveness mean? Forgiveness means that just as you went for your PPP loan to a financial institution, you will go back to that financial institution to ask for forgiveness so that your loan may be indeed turned into a grant. Important things here, important updates, really important updates. If you received an EIDL advance, EIDL means Economic Injury Disaster Loan. If you received one of those advances early in last spring, the guidance prior to this regulation was that those advances were going to be deducted from your PPP loan, and that has been changed. I'm going to answer a question that is always in the chat box. What happens if I've already gone through the process? If you've already gone through the process, we do have guidance in place so that you will be made whole. We do continue to simplify the forgiveness process. We don't have the exact guidance for loans under 150,000, so please stay tuned for that. But some of the updates in the bill that was signed do include updates for the forgiveness process. Next slide. Excellent. So now let's go to the second draw PPP. So if you've received a PPP last spring, but your business is still in need, you may, with this new legislation, have a second PPP loan. But there's been a lot of changes here. So let's go through some of them. Number one, the maximum loan amount is now only $2 million. Number two, the amount of employees is the maximum of 300. Another change is that if you are in certain NAICS codes, such as accommodations and food services, your loan amount will now be 3.5 times your monthly 2019 or 2020 payroll costs. So again, if you are in a NAICS code 72 in the accommodations or food services industry, you are able to ask for a larger second draw loans. Question I always get is, can I go for the second draw if I haven't gone through the PPP forgiveness for the first draw? And that answer is yes. The PPP forgiveness process does take some time. We understand that. So you can indeed go to the second draw even while you are in the process or before you've gone to the process for forgiveness for the first draw. Another question I always get is, do I have to use the same lending institution for the second draw? And that answer is no, you do not have to. That is, again, up to you. But it's important to know that the second draw is very similar as the first PPP, is you will be applying through your financial institution. Next slide. And who can apply for the second draw PPP loans? Again, this talks a little bit about what I've already discussed. We've one, increased the eligibility. Number two, we decreased the amount of employees you can have. And number three, the maximum loan amount is now $2 million. Next slide. So we are here at SBA are here to help. There is new information coming out all day. One of the things that I did not talk about is some of the other items that are included in the bill that was passed. Those include the information on shuttered venues. Those include information on idle advances. And what we also need to remember is that our traditional 7A SBA loans are still available. So make sure that you are following SBA Connecticut on Twitter and that you are receiving our newsletters, which will give you important information, give you all the updates as they come through. We're thrilled to be here with Metro Alliance. We're thrilled that we have accountants on the phone, so we don't have to, accountants on the line, so we don't have to try to answer your tax questions. But there is a lot of help for the small businesses, and our mission is to help the small businesses get through that. We'll be working with our partners at DECD, and you know, there's a lot of information to come out. So thank you for letting me be on and give you a high-level overview of the federal stimulus package and how the PPP has now reopened. I'll turn it over to you.
Thank you, Catherine. Appreciate the partnership with both you and Moraima and the SBA at large. We've all had to go through some really interesting learning over the last year, and appreciate the great partnership that we've had with your office to make that happen. Moving on, we'll turn it over to Drew Andrews and Brian Kerrigan with Whittlesey. Again, another great partner of the Alliance, have helped us as an organization through quite a bit, and have been really a great go-to for us as we have had to navigate, like you, all of these new opportunities. So that said, Drew?
Thank you, David. We obviously appreciate to be here with you and our friends at SBA. And we have a little presentation that kind of goes a little bit more in detail to some of the nuances of the new act and some of the revisions to the original PPP. And I'm going to turn it over to Brian to kind of lead us in that discussion.
All right, thank you, Drew. Next slide, please. So let's go through the overview. So the agenda for today, the first thing we're going to talk about is PPP 1 clarification. Then we're going to talk about the PPP second draw for employers with fewer than 300 employees. And then we will talk about the employee retention tax credit. Next slide, please. The Consolidated Appropriations Act basically allowed for $900 billion of COVID-19 aid. $300 billion of that was in the form of unemployment benefits. $284 billion is in forgivable Paycheck Protection Loans. New loans can be made through March 31st of 2021. The Act has expanded the allowable uses of PPP funds, simplified the forgiveness process, and clarified the proper tax treatment. Second draw loans are intended for smaller and harder hit businesses. Next slide, please. First-time PPP borrowers are subject to the program's original eligibility requirements. Business and organizations that did not receive a loan or received an amount less than what they expected can reapply for the maximum amount of the loan. Borrowers that returned all or part of their previous PPP loan can now apply for the maximum amount available to them. PPP borrowers may apply for a second draw if they have 300 or fewer employees. They used or will use all the proceeds of the first loan, and if their gross receipts fell by more than 25% on a quarter-over-quarter basis from 2019 to 2020. Next slide, please. PPP 1 clarification, the costs eligible for loan forgiveness. This has been expanded. So originally we had the payroll costs, the mortgage interest, the rent, utilities. The statute has clarified group insurance payments to include life insurance, disability, vision, and dental insurance. But it's also added categories: a covered worker protection expenditure, covered property damage costs, covered supplier costs, and covered operating costs. Next slide, please. A big question that a lot of the accounting firms had is deductibility. So PPP borrowers can deduct the payroll costs and other eligible expenses covered by forgiven loans, even though the loans themselves are tax-free income. Next slide, please. Second draw PPP eligibility. Borrowers are allowed one second draw loan. Entities that are permanently closed cannot receive a second loan. Businesses, certain nonprofits, housing cooperatives, veterans organizations, tribal business, and small agricultural cooperatives with not more than 300 employees. This is a change for the second draw. 501c6s and destination marketing organizations are included as long as 15% of their receipts, 15% of their business activities do not consist of lobbying, and their cost for lobbying cannot exceed $1 million. This will include self-employed individuals, sole proprietors, and independent contractors. We're going to be looking for borrowers whose gross receipts during the first, second, third, or fourth quarter of 2020 demonstrated a 25% reduction from the same quarter in 2019. For entities that were not in business during the first or second quarter of 2019, but were in business during the third and fourth quarter of 2019, we're going to be looking for a gross receipts drop in the first, second, and third quarter that demonstrates a 25% reduction from Q3 or Q4 of 2019. Next slide. How much can you borrow? So for non-seasonal type employers, it's going to be 2.5 times your average monthly total payroll cost for 2020 or 2019, not to exceed $2 million. For the NAICS code 72 restaurants, bars, and hotels, they're going to get 3.5 times the average monthly total payroll costs. For businesses that did not exist 1 year prior to 2/15/20, you're going to take your total payroll cost, divide by the number of months in which the payroll was incurred, and multiply that by 2.5 times, not to exceed $2 million. For seasonal employers, you can use the average monthly payroll for any 12-week period between 2/15/19 and 2/15/20. Next slide, please. PPP2 covered period and application. Borrowers can choose a period between 8 and 24 weeks. So in the original round, there was some discussion as to whether you could do that. You certainly can now do that. SBA Form 2483 SD will be used as the second draw application. For loans of $150,000 or less, a borrower can submit a certification attesting that it met the revenue loss requirements, but they don't have to submit the documentation until the date before the forgiveness application. We have heard from bankers on this provision, and it seems like many of the bankers are going to be requiring the demonstration of the 25% reduction, even though the statute doesn't call for it in terms of it being with the application. What do you use to demonstrate the $150,000 what do you use to show the demonstration of the loss, the tax forms? Probably not a good choice for most of our clients because the 2020 tax forms have not been filed yet. More likely they'll be using quarterly financial statements or bank statements to show the drop in gross receipts. Next slide, please. Loan forgiveness. So obviously the ultimate goal is to get the loan forgiven and to turn it into a grant. There, as the SBA said, there has to be a 60-40 cost allocation between payroll and non-payroll. We've expanded some of the payroll and non-payroll costs as we touched on earlier. Payroll costs, mortgage interest, rent, and utilities, those have always been there. Group insurance payments for life insurance, disability, vision, and dental insurance are included as payroll costs. We have new categories for covered worker protection expenses, covered property damage costs, covered suppliers costs, and covered operating costs. Next slide, please. Simplified loan forgiveness for loans under $150,000. Borrowers must sign and submit a one-page certification form and attest to comply with the requirements. The cert requires a description of the number of employees retained, the estimated total amount of funds spent on payroll, and the total loan amount. PPP second draw borrowers must submit documentation showing a 25% reduction on or before the date of forgiveness. These loans are all potentially subject to audit, so employers are required to retain employment records for 4 years and other records for 3 years. Next slide, please. Tax clarification. So PPP borrowers can deduct payroll costs and other eligible expenses on their federal income tax return. Forgiven amounts in EIDL loans are also not included in income. For partnerships and S corps, any amount excluded as income shall be treated as tax exempt income, and there should be no effect on basis because the tax exempt income will be offset by the deduction. Next slide, please. Thank you. We certainly appreciate the opportunity to be here today. We'll take any questions that you may have.
Great. Thank you, Brian. And we have a number of questions that were submitted in advance of the webinar. Several of them have already been answered through your presentations. A couple that weren't. One, for nonprofits, does the loss of income include both earned income and contributed income, or just earned income?
Drew, you want to take that one?
Well, it's kind of a little unclear, but I would think that it would include earned income and unrestricted contribution income versus restricted contribution income that might relate to things such as capital campaigns or specific purposes.
Good, thank you. We have an interesting question here submitted both in advance and online. I bought and opened an inn with a federal employee identification number in September of 2019, hired employees, and then opened a restaurant as part of the business in May of 2020. They now have 16 employees. Are they eligible for PPP?
Yeah, the only thing that I've seen related to that is you had to be in business as of February 15th, 2021. So I do think you would be eligible. Obviously it'll come down to what your 19 and 20 payroll costs are for purposes of taking the loan.
Good. Here's one. If you received a PPP in the first round, but returned it due to the lack of forgiveness guidelines, is the organization considered a first or second time applicant?
I can
I
answer
believe
this
you'd be
one.
considered a first-time applicant.
Right. And this is, I agree with Brian, and this is a really important reason, why they reopened the PPP. I am talking with a specific business in Hartford that did just that. They returned it and didn't follow through on the process. So you are a first time, you get to go for the process first time PPP. And so you have the larger threshold and can go based on those larger thresholds. So there's only 2 CFIs in Connecticut that are currently taking those PPP applications. And then the larger financial institutions, hopefully we're getting guidance soon within the next days as when they will be opening their application. But that person would be doing a first draw PPP.
Good, thank you. Here's a question on employee count. Specifically, is the employee count maximum of 300? Does that represent only FTEs versus part-time count?
Our understanding is that it's a head count calculation as opposed to an FTE calculation.
That sounds like the question.
Yeah. Well, it is. So 300, you can have 300 employees via head count, but it's not asking you whether you have 300 full-time equivalents or not. It's asking you whether you have 300 total employees or not.
And a different question for PPP2, does gross receipts mean cash or accrued revenue?
Yeah, the guidance is not particularly clear. I mean, we have some clients who are on a cash basis for tax purposes, on an accrual basis for accounting purposes. And it seems like you could potentially use either method under the definition of gross receipts, which basically tie it back to your accounting method.
And I believe we had this already answered in the presentations, but does the second round borrowing get added to the first round borrowing, or are they standalone?
I'll take that one. That they are standalone, and I just want to clarify a few of the points. Number one, to go for the second draw of PPP, you don't necessarily have to have gone through the complete forgiveness process for your first PPP. And number two, you don't have to go to the same financial institution for your second draw PPP as your first one. But please, everyone remember, this still is the Paycheck Protection Program. So it's still primarily relying on your payroll expenses.
And we have a request to repeat what documentation will be required regarding the 25% loss, particularly for nonprofits.
Most likely you're going to have some sort of a quarterly financial statement if you have that available.
Good. An interesting question here. What if you sold an asset during the quarter you want to use? Does the cash you receive from that count as a cash receipt?
Depends on whether the item would be capital or not, but capital gains and losses are excluded from the definition of gross receipts. So if it's a capital gain or loss, you could potentially exclude that cash.
Here's a question. I'm a sole proprietorship and received the original PPP loan. how long will it take to verify forgiveness of the original loan?
That really depends on what bank that you're working with. I would say every bank has sort of different requirements as to how long it's taking them to process forgiveness applications. I think the other thing that you may run into, you may want to wait because there is a simplified forgiveness process if you're under $150,000 in loan, and some banks have suspended taking forgiveness applications as they deal with the second round PPP draw.
And I'll just add on to Brian's comments that both your financial institution, needs to review your forgiveness package as well as the SBA. So it is a time-consuming process. If the loan is forgiven, that amount will be deposited into the bank, similar as to how you received your PPP funding. And then just to clarify, we still do not have the documentation for what the simplified forgiveness is going to look like. So, we're still waiting on a lot of guidance from the SBA and Treasury. So the best thing you can do at this time is to make sure your financials are in place and ready to go as soon as the forgiveness portals open up completely for the financial institutions.
Thank you. For the average payroll costs, it has been referenced as 2019 or 2020. Is that because we are still waiting for clarification on which year, or because it is either 2019 average costs or 2020 average costs?
It can be either.
And Brian, you're the accountant, but I think there's flexibility here for folks, correct?
There is. I mean, you can use 2019 or 2020. I mean, I would think you'd probably use the year that results in the most average monthly payroll cost so you can maximize the amount of your loan.
And it's a quarter to quarter comparison, correct, Brian?
It is a quarter to quarter comparison on the gross receipts, the 25% reduction.
Right. And David, if I can, many times on these programs, I'm also on with someone from DECD. So there's a lot of programs out there. The state's program is a 30% reduction. And I'm sure that you've had Gwendolyn on, but again, getting your financials in order for any of these programs is the best thing you can do today.
Thank you. We have another question. I run a small business, and because of the decline in sales as an owner, I have not been taking a paycheck for the last 4 months. Since there is no record of my pay during that time, how do I account for my salary in the new PPP draw application?
David, did they say what type of business they are in that question? New business.
It does not.
Okay, because so let's say you're an S corp and you weren't taking a wage. I think you'd have a reduction in your average monthly total payroll costs. But if you were a sole proprietors don't take a wage, and your PPP portion of the average monthly payroll cost would be equal to your 2019 Schedule C divided by 12 times 2.5%. So you may get different answers depending on what type of business structure it is. So maybe if we can get some more clarification on that question.
Also, Brian, I think you could also use 2019.
You could, yep.
That might create, if you're paid in 2019, which I'm presuming you are, that would give you that your income for those months.
That makes sense.
And do payroll costs include company paid FICA?
No, you don't use gross wages. You don't take any reductions for FICA, federal withholding, Medicare.
And there's a maximum, correct, Brian?
There is a maximum, so it's, it's 100,000 on an annualized basis. So, basically the way that's going to break out over a 10-week period is a maximum of 20,833 for owners.
And for calculating the average payroll for a year, can we use a fiscal year rather than a calendar year?
The statute only contemplates three things. One being you could use a 2019 calendar year, one being that you could use the 2020 calendar year, or the third being that you could use the calendar year immediately preceding the date of the application. So I would say most borrowers are going to want to use the 2019 or 2020 payroll to come up with the allocation, because there's good accounting cutoffs there.
And I believe this may have been in the presentation, but does the 25% gross receipts test apply to first-time borrowers or just second draws?
Just second draws.
Right, and this is where it's important for folks to remember, again, it's a lot of complex information, but if you didn't follow through on the PPP the first time, or if you are unable to apply for PPP, there's an opportunity to apply under the parameters of a first draw, which would not include the revenue reduction.
Excuse me. And will there be, is the second round a loan, or is there going to be a chance to submit forgiveness?
No, there will be the opportunity to submit for forgiveness.
But it is another way of calling it out is that we are reopening the Paycheck Protection Program, which are SBA loans that can be forgiven if used for the proper expenses.
Good. And if a borrower received less than the full amount, then they would have been entitled to for a first PPP loan because of rules guidance changes subsequent to the receipt of the loan proceeds is a request for additional PPP funds up to the full amount considered a first or second PPP loan.
I would consider that basically a top off of your first draw. So I would consider that a first draw loan.
Thank you. Sorry, I got a little allergy thing going on. A question here is, I believe we may have, for a nonprofit that accrues revenue, can we choose cash receipts and not revenue on the financial statements to demonstrate the 25% decrease?
I would think it's the way you keep your books. So I would say no, if you're using an accrual basis.
Good. We have a follow-up question on the sole proprietorship and how long it would take to verify forgiveness. Specifically, what are next steps? Seek an application from our lender or something else, and when should that be widely available? And should they seek an app from a different lender?
You have to apply for forgiveness through the bank that you originally went through. So if you're under 150,000, there's potentially going to be a simplified forgiveness, but the SBA has, I think, 24 days to put some rules and regulations around that. If you're over 150,000, you may not be able to submit a forgiveness application at this time because the banks may be focused on giving first draw and second draw loans. So you may have to wait, but if you any questions about the forgiveness process and how to start that would go through your bank.
Good. Question here. I'll try to go slow because it's fairly detailed. Are we eligible if we are operating and incurring expenses during Q3 and Q4 of 2019, but did not establish file for the LLC until January of 2020? And we'll go with that first.
Well, I guess the first question, I don't know whether they got a first or second draw. They're talking about a first or second draw. You know, if it's a first draw, you don't have to show the 25% gross receipts deduction. If it's a second draw, you're going to have to show a 25% gross receipts reduction. With 2019 being higher than 2020, so that would really be a fact-specific question that we'd have to know a little bit more.
Yeah, it looks like they didn't establish the actual entity until January of 2020, but they had been incurring expenses in 19.
And the only thing that I think that I've seen that pertains to that is you did have to be in business on 2/15/20. So it sounds like they were actually, because they had operations, but it sounds like they also set up their LLC prior to 2/15/20.
David, may I hop in here?
Please.
Hi. So these are very, very specific and nuanced questions. The two gentlemen that are on the call with me are obviously very highly qualified CPAs that can deal with those. And the other thing that we do have, the SBA does have resource partners. So, you know, the important thing is to make sure you're talking, when you have these very specific questions, make sure you're talking, you know, to a qualified individual and or utilizing our resource partners. And I'll just give them all a shout out here. That is the Small Business Development Center, SBDC, the Women's Business and Entrepreneurial Center at the University of Hartford, the Women's Business Development Council, which has locations throughout the state and is organized in Stamford, and then SCORE, which is our retirees, volunteers who help small businesses. And then we also have, you know, some resource partners such as the Spanish American Merchants Association that has just done tremendous work in Hartford to get people the information. And now we are working with, you know, some other organizations to get, you know, business specialists out there to help our small business, you know, the smallest of the small, get through these very complex questions. Not all of them can be answered and questioned and answered on a webinar.
Yeah, just to chime in too, I think when we do get to some of these specific nuances, they do become more than just one question. There's a dialogue that has to be built up to really get you the right, correct answer.
Right. And I think that, Drew, I think that it's also one of the important things, folks, to remember is that there's some leeway here on the second draw. You know, you're calculating a 25% reduction. So you have to, you know, have a good conversation there and look at all your quarters. It's not, you know, it's not a, I can't answer it in 2 minutes.
Right.
You know, it really does take, again, I don't mean to be repetitive, having your financials in order, or speaking with someone, either a professional or one of our resource partners, to ensure that you are getting the maximum stimulus out there that's available. And that's our goal at Connecticut SBA, is to help these small businesses get that maximum amount to help these small businesses recover.
Here's hopefully a little less specific question. If you had a 25% reduction in profits for a quarter in 2020, but not for the full year, can you base your application on the quarter only?
Yes.
It has to be 25% of gross receipts though, not profit.
Right.
Good. And what if, so if it's a quarter to quarter comparison, how does that work if you didn't have 2019, and this says payroll?
Yeah, there are some specific rules that if you weren't in business, I think in business in 19 or not incurring payroll in 19. So I think that really is a very fact specific question.
Good. Rolling through here, has the SBA given a more detailed process and timeline for low-income area businesses to apply for the difference of the 10K grant?
Okay, so I believe that one's for me, David. So what are they talking about? So many people on this webinar are probably saying, what are they talking about? So this is obviously someone with a question that is very, is ready to move. What's the grant mean? So in the beginning of the pandemic, one of the programs was called EIDL Advance. EIDL stands for Economic Injury Disaster Loan Grants. And these were advances. Some people got the advance up to 10,000, others didn't. There is a provision in the new stimulus to, there's a set aside for businesses in communities that are underserved to be able to go back and get up to that 10,000. We are still waiting guidance on that. So they just have to hold on and have a little bit more patience. But that, I believe what that question is asking about the EIDL advance, there's a stipulation in the new bill where there's a set aside for up to $10,000, and we're still waiting guidance on how that is going to proceed. I don't know if Brian and Drew would like to add anything to that.
No, I think that sounds correct to me.
And just a follow up to, you mentioned SCORE, the question, does the SBA have a list where small businesses can get help similar to SCORE?
Absolutely. And if we're not putting it in the chat box, it is on our SBA website. So SCORE is, I believe, www.score.org. SBDC is the Small Business Development Center. And we have one here in Connecticut that is associated with UConn. We have the, and I don't mean to drown everyone in the sea of acronyms, but that's the world that I live in. We have the Women's Business Development Council, WBDC, that is out of Stanford. And then right here at the University of Hartford, we have the Women's Business Development Center. And don't let those names fool you. You do not have to be a woman to get those services. So if you are trying to recover, or if you're an entrepreneur, that's where you can get some advice. And the 4-letter word is free.
David, before you hop on to the next question, we have another question that came in. And I think it's probably more directed to SBA, but I'll leave it open to anyone who wants to hop in. The person asking the question said that they received notification from their PPP lender that advised them to initiate the forgiveness process. When they went to the SBA link, it said that their lender would be helpful with the process. However, their lender informed them that they weren't able to provide any assistance. Are you able to provide any insight to them?
Okay. And let me unpack that question a little bit with some things that I know. Number one, in order to go through the process of forgiveness, you're going to send your application through your bank. Some banks currently have that portal open, others don't. On the SBA website, you can get, applications, forgiveness applications from us. And, that's the way we understand the information. However, the information does go through the bank. You do not go through SBA to go through the forgiveness process. You go through the lending institution that you received the money through SBA, that you received the money through the PPP. So again, you go through the lending institution. The SBA's website does give you the information that we are asking for, but you go through your lending institution. Margot, does that answer that person's question, do you think?
I think so. I'm sure they'll ask a follow-up if they need more information.
Brian or Drew, do you have anything to add to that?
I think that was perfect, Catherine. I think you obviously need to go through your lending institution. And they could probably, should be able to give you a little guidance, but I think if not, I would talk to your accountant and he or she could give you probably some more guidance on that, or go to one of the folks that SBA recommended. They could probably help you with that to process too.
This is just a confirmation. If considered a first PPP loan, the 25% reduction in gross receipts requirement would not seem to apply. And I think I'm hearing that that is correct.
Correct. Yeah. Correct.
Good. And just a confirmation on the nonprofit question. Did I hear correctly that the reduction in revenue for a nonprofit does include restricted revenue and not just earned?
I would say restricted revenue if would not count if it was primarily for like a capital campaign and things of that nature.
Yep. And
once again, I think that's a question that you should get some further guidance on and look at it. It'd be helpful to look at something to see what type of restricted revenue is kind of a wide category. And the term is used loosely in a lot of ways.
Good. And a couple other questions here that I think we've already answered through the webinar here. So we're getting right up on our time. So I'd like to take the opportunity again to thank Drew and Whittlesey and Moraima and Catherine over at the SBA for your expertise, for lending your time to us today to try to help as many companies as we can. Obviously, the more we're able to get this assistance into the hands of our companies and businesses, the better opportunity we have as a region to recover from this pandemic long term. So that said, thank you again to everybody who's attended today's webinar. We will continue to monitor the offerings of the federal government. If there are new applications, if there are new guidelines, if there's a new program, we will of course bring together as many of the most relevant people to help guide us on how to apply, how to access, and how to get the dollars into the hands of our businesses. Before we leave, Drew, Catherine, Brian, any parting thoughts?
I would say as of today, start getting your information ready for PPP2. I think this is going to open up fairly soon, as Catherine has said, and to a wider group of people, and there is potential that the money does get exhausted. So we're recommending to our clients to get the information ready and be prepared to move quickly.
I think that's excellent advice. One thing we did not share today, that it will be a first come, first serve. So even though it is not open yet for all institutions in Connecticut, that doesn't preclude you from starting the conversation. And thank you again for letting us enter your households or offices today to talk about this very important topic.
Yes. Well, thank you again. Thank you to everybody who tuned in, and we hope to see you again soon. Thank you.
Take care.